Hello everyone, welcome back to the channel. 2025 was one of the most eventful years for investors. Gold hit record highs, US markets outperformed, small caps crashed and bounced, and new products like specialized investment funds made headlines. In today's video, we'll unpack the top investing lessons from 2025 and what we can do better and smarter in 2026. Stick till the end because we'll also talk about how to position your portfolio for safety and growth next year. Let's begin with gold, the clear outperformer of 2025. Gold prices surged over 40 to 50% this year, beating most equity indices and even fixed income. It reminded us having why 5 to 10% in gold via ETFs or sovereign gold bond acts as your inflation and crisis hedge. But with prices already near record highs, 2026 shouldn't be about chasing gold. It should be about holding and rebalancing. 2025 proved the power of global diversification. While Indian equities moved sideways, US markets and the Nasdaq rallied over 30%, and international mutual funds were among the few categories with consistent positive returns. For 2026, every Indian investor should consider having 10 to 20% in international exposure through global ETFs, US index funds, or feeder funds. Watch my other video on international investing. I'll leave the link in the description. Small caps gave investors a scare early in 2025. The small cap index fell nearly 10% in January, but by mid-year it had rebounded over 20%. From March low to July high, the rise is 30%. That's a lesson in patience. Volatility creates opportunity. The trick is to add when others panic and not when the rally is already in full swing. You could have made some lump sum investments on top of your existing SIPs. 2025 rewarded investors who practiced discipline, not just in what they bought, but how they allocated. Those who booked partial profits after big rallies rotated into debt or cash and rebalance their portfolios are now best placed to take advantage of 2026 dips. For 2026, set a clear asset mix. 60% equities across large, mid, small caps, 10 to 20% global exposure, 5 to 10% in gold, 10 to 15% debt or cash for buying opportunities. This will help you take advantage of the opportunities like the small cap crash this year. Watch my recent video on profit booking. I will leave the link in the description. Now let's talk about something new. SIFs or the specialized investment funds. They have been in the spotlight lately as the next frontier in professional money management, offering exposure to high return investing that traditional mutual funds cannot. But here's the thing. These are new products, still evolving in structure and regulation. We don't know yet all of the risks, costs, and liquidity challenges. Transparency, track record, and taxation are still taking shape. So, while SIFs may sound exciting, 2026 isn't the year to rush in. It is better to observe, learn, and take a calibrated approach because the 10 lakh minimum investment is still a large amount for many retail investors. 2025 reminded us that the best investors aren't the ones predicting, they are the ones preparing. For 2026, keep this mantra. Stay diversified, not distracted. Stay patient, not panicked. Stay informed, not impulsive. Markets will swing, but your strategy shouldn't. If you found this video useful, Hit that like button, subscribe, and share this video with your investing friends. Comment below which 2025 lesson will you apply in 2026. Let's grow smarter together.